On the line in Toronto, we have Judy. Good evening, Judy.
Good evening, Mark. David, I bought Manitoba Bell at $10 higher than it is now. And while I was unexpectedly called out of town, the stock tanked. Given that MBT seems to be based on landlines, I wonder if someone will take it over to raise the price, or do you see any other way that the stock price will revive? What do you think I should do with it? Right. Thanks very much.
So, Judy, certainly MBT has often been touted as a takeover candidate. And there are those that would say a deal could take place, and that would be a great catalyst. And it would be. Having said that, to invest simply for that reason, we think is not a good idea. So when there's a clear leadership theme in the market, like the telecoms have been, I think the last thing you want to do is focus on one of the poorer performing ones. Because yes, if the theme gets strong enough, they'll come back and take them all higher. But the risk is that if the theme rolls over, then the weakest performing stocks tend to be the poorest performers going forward. So in the case of Manitoba Tel, there's a couple of issues. They've got a big pension deficit. They've got a growth problem, obviously. You know, I think at the end of the day, there are better places to be. I'd rather own TELUS. I'd rather own BCE. I'd rather own Verizon. I'd rather own AT&T. There's a bunch of different ones, but that I prefer not to be in the MBT as your number one choice.
Let's go to Stony Creek, Ontario now to talk to Richard. Good evening.
My call. I was just wondering if you can tell me if you see any growth in Maple Leaf Foods. I know they're starting up a new facility in Hamilton and doing some consolidations. And I was just wondering if you could see any growth in the share price in the near future. And I'll hang up and listen to your call. Thank you.
Sure. So, you know, I've followed Maple Leaf Foods my large part of my career since the mid-90s. As when it used to be the old Canada Packers. And really the problem with Maple Leaf is that so much of their business is focused in protein, and protein is such a hard business to make a gross margin in. So the reality is, you know, the stock's been, you know, range bound for 15 years, and at some point maybe things get swung around. But we prefer to focus on, and we do like food companies, and we are invested right now. We'll talk about one. It's one of our picks today. But I would, in a really simple form, focus on those that are in carbohydrates as opposed to protein, because there's lots of margin in carbohydrates. There's not much margin in protein.
I never heard it broken down that way. That's interesting.
It's very hard to make a margin in chicken and pork.
Right. All right. Here's Linda in Lethbridge, Alberta. Go ahead.
Hello, and thank you. I'd appreciate hearing your comments on Weatherford, and if you like it, what price would be a good price to get into it at. Thank you.
Okay. So Weatherford has a lot of market share in, you know, oil and gas equipment, and I have a history with this company. We've invested in it in the past. I will say that I was less than pleased with the way management along the way led investors to believe certain things were happening and ultimately disappointed down the road. Mm-hmm. So I think that management has some credibility issues. So as a result, we've stayed away from this stock always. There's been lots of oil and gas equipment companies that have done really well over the last 3 years. This is not one of them. And so I think that there's better companies to focus on.
And plenty of them in Canada, too.
Lots of them in Canada. The only thing that does concern me a little bit is we've got, you know, chock-a-block drilling going on all over North America, and the drilling services companies and equipment companies in general are underperforming. So what happens often is when you have a boom, at the beginning you've got a lack of supply of equipment, and as the boom goes on, there's capital available to grow these companies, and you wind up with lots of suppliers, and the margins get a little compressed, like it happened in the fiber optic business, you know, in 2000. So these all should be behaving better than they are, given what's going on in the industry. I think you have to pick your spots and find companies that have sort of unique positions in the market.
I just had a flashback to the likes of Global Crossing and 360 Networks, and during the tech boom. All right, let's stay in this decade, and we'll come right back with David Burrows. More questions on North American large caps right after this.